Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. With us is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We have a lot to get into, but let's start first and recap what happened on the markets this week.
Yeah, if we start on the cattle side of the picture, it's nice to talk about live cattle prices, fed cattle prices that were up about $2.25 for the week. When we look at cash feeder cattle prices, I would call them steady to four higher for the week. Demand was really good for feeder cattle this week. I'd say higher futures prices certainly helped those cash feeder cattle prices as well. When you look at fed cattle futures, we were up about $4 for the week on fed cattle futures, and also on feeder cattle. October 2017, we were up about $5 for the week, and I remind us that's up about $17.50 in the last month. So some very strong feeder cattle prices in those current contracts. Choice beef cutout was up $1 for the week. When we look at on the hog side, we got a little different story. It's kind of the same negative story that we've talked about. Cash hog prices were down pretty hard for the week, nearly $4 lower from where we left off last Friday. The futures prices as well showed a lot of weakness as we went through the week. The pork cutout value was down $4, and I feel like a broken record at this point. Much of that decline we could probably put at the feet of the belly market. We now have belly prices that are below year-ago levels for the first time since May 3rd. And, just to put that in perspective, on August 15th, we had belly prices this year that were 144% of a year ago. So it's been a lot of volatility in belly prices, and we've certainly fallen hard here over the last several weeks.
Scott, we know that seasonally this is when we see the largest run of hog slaughter numbers. How much pressure is that putting on our cash prices in general as we continue to watch them slide?
Yeah, so I think we are seeing these big runs. Pretty easy to keep plants reasonably full given the large runs we've been having of late. And I go both large runs of hogs, but as well ample supplies of pork to try to move every week keeps pushing that pork cutout value down as well. So it's certainly showing us where we're headed, I think, for the remainder of 2017. With the kind of large runs that we're having, it will certainly be tough to get much strength in hog prices, I think, for the remainder of the year.
I think it's really interesting as we looked, and we talked about that last week. Last week combined total was the 7th largest beef and pork combined. And all of those records, the only other ones that were more came at the same time that we're heading into in the fourth quarter of last year, this year.
Yeah, we just can't forget that story of large meat supplies hangs over us all the time as we've gone through 2017, and frankly is going to continue with us in 2018, given where we sit in many of these markets. So let's hope demand stays strong as we move into 2018, because that's really what we're going to need when we talk about even more growth in meat supplies moving into 18.
Scott, let's talk a little bit livestock slaughter. We have a lot of reports to get into this week. Livestock slaughter numbers were the first report to come out earlier this week. As we take a look at those numbers, what are some things that we're watching on both the beef and pork side?
Yeah, so a lot of heavy supplies. Commercial beef production for August set at the highest level we've seen since October 2007. So we're ramping up on the beef side. When you look at the combination of beef and pork production for August, it was the highest ever. So lots of meat supplies in August. It reminds us of why we've been talking about the weekly runs as high as they've been. When we look at the hog side, one of the things that's starting to jump out, we now have hog dressed weights that are above a year ago level for the first month since February of 2015. So lots of supplies, growing slaughter weights. I guess some of the good news is when you look at beef cow slaughter, the August numbers were up nearly 15%. So maybe a little less growth in that beef cow herd when we get numbers out next January.
I want to talk a little bit about those hog slaughter numbers. As we look at weights being up as well, combined with these large runs, and we already talked about there being pressure on hog prices. How does this figure in as we look at the remaining quarter of the year?
Yeah, so I don't think we've hit our highest weekly run yet when you look at hog numbers. And And I'll say the nice thing is we got more shackle space. We can handle more hogs, so making those larger runs doesn't necessarily put the same amount of pressure on the shackle space as we saw a year ago, but we still have more pork to deal with. And I think that's going to be the issue. How do we move those ample supplies of pork that are out there, and at what prices do we really need to see us go to make sure we move that pork product?
The cure for lower prices is?
That's right, low prices. Sometimes I'll say, unfortunately, sometimes that old adage seems to take longer to take effect these days. We get in low price situations and it tends to last a little longer, as it just takes longer to get the supply side of these industries to slow down. When you see the kinds of large cash investments in hog confinement buildings, let's say, you don't have much choice but to raise hogs. You can't really operate those at anything other than near 100% capacity, and that creates a very slow supply response, and might mean we might drag along here in lower prices for longer than we might have thought about in the past.
Cold storage report out this week as well. As we look at those stocks, any big surprises in those numbers?
Yeah, I don't think we saw any big surprises. I will say, you look at beef ending stocks, we did return to year-ago levels in August. Really, first time since early this year, we've seen beef stocks back at 2016 levels. I worry about the growth that we see there, almost 35 million pound increase in beef stocks over the last month, and what that means. When you look at the combination of beef, pork, and poultry stocks, we are above year-ago levels for the first time, really, frankly, since the start of the year. So stock situation isn't necessarily horrible, but it might suggest to me we're getting a little more pressure on prices as we get a little more backlog in stocks and start to talk about total meat stocks, at least, that are running above a year ago levels.
But this is only the first month that we've seen that, correct?
That's correct, and you're correct. I don't want to read too much into that, because seasonally we're going to start falling down in stocks once we get through the September numbers. We'll see what happens. Let's hope that we haven't started a long-term trend of ending stocks that stay larger than year-ago levels for a period of time. If we get under that scenario, I think we know then even more pressure on where wholesale and retail prices go, trying to move product into markets.
The last report of the week came out this afternoon, cattle on feed report. As we take a look at that, are we not surprised when we see those numbers as that story continues to unfold?
Yeah, so I think there was a lot of thought that we pulled calves forward with the heavy placement numbers we saw a couple of months ago. When you look at the pre-report estimates for placements in August, the average pre-report estimate would have said we're down 3.2%. Well, we got the report today and we're actually up 2.6% in terms of those August placement numbers. So heavier than we thought, and in fact, we came off of a pretty high level in 2016, August of 2016. So pretty good placement number. I have a hunch we'll get some lower cattle prices as we start early next week. I don't think we can talk about this being the wall of cattle that some have talked about coming, but it certainly is going to get the attention of markets, I think, early next week. When we look at on-feed numbers for September 1, we were up 3.6% according to the report. And again, that falls a little a little above the average pre-report estimate, but not terribly outside the range by any stretch.
All right. I'm going to get into the weeds a little bit as we round out this week, Scott. We talk so much about competition in the marketplace, whether it's on the global marketplace and other countries giving us a run for our money. But here domestically, we're starting to see a little bit more outside of the box competition. Specifically, I think about some of the meatless meat competition. Like this week, we've seen some big announcements about the Beyond Burger that's making its way into the market and into the mainstream. How much competition does that present for both beef and pork here domestically?
Yeah, you ask a really good question. I always start this by, do not underestimate the competition of substitute products like what we see with Beyond Burger. I'm not certain individually I'm excited about the combination of soy product and beet juice to give it the red color that we like to see. However, that doesn't mean there aren't a growing number of consumers that might actually have a preference towards products like that. And so I do think this competition for center of plate that we haven't talked about for a few years now is going to become much more important as we look ahead. And if all of a sudden you see these kinds of alternative products, if you will, gain traction with consumers, it's just that much more competition we have to face. So we should not rest in terms of thinking about how we best position beef and pork products in the marketplace to attract consumers. We must always be focused on consumer demand.
But on the other side, I want to talk about there's been a delegation in the U.S. from China, in Nebraska specifically. So you've got these buyers coming in from China who, as you look, and we've had coverage about this on our website at brownfieldagnews.com, but to hear them talk about how the delegation gets to enjoy high quality cuts like ribeyes, like we enjoy them, has to maybe give us a little boost possibly on the international and in our global competition?
Absolutely. I tell cattle producers all the time, if you can grow demand for your product, it's nothing but a good situation at the end of the day. When you see a country like China, who's sitting there, I don't know, roughly 10 pounds per capita in terms of beef consumption today, maybe not unrealistic to think about 20 pounds per capita, 1.4 billion people, you do the math, it's a lot of beef. And we always are going to be turned to, I think, for a period of time to be the market that can provide higher quality beef. That kind of demand growth could be what helps these markets, especially in a large supply situation, which, by the way, I always tell producers, many of them on the livestock side, less interested in maybe using futures markets to help protect risk. If you look at the prices being paid for prime beef, for example, today, and the genetic opportunities or technologies available today to really go after that high quality beef side, perhaps that's a risk management plan. As much as choice beef prices have moved much lower since their peak in mid-June, yes, prime prices have moved somewhat lower, but a lot less volatility in that prime choice spread, if you will, relative to what we think of with the old traditional choice select spread.
There's plenty to think about and to keep our eyes on as we have continue our conversations about demand and about where prices are headed and competition along those lines as well. Scott, anything else this week?
I think we've covered the major issues this week, Megan.
Next week, hogs and pigs report for the third quarter of the year. Any thoughts about what we might see and what we're expecting in that report?
I think we're going to continue to see some of the trends that we've been seeing for a period of time. Despite what's been lower prices of late for hogs, I don't think that's really slowed down much of the supply side growth that we've been experiencing. I expect when we see hogs and pigs, we're going to continue to see that trend of more hogs coming as we look into 2018.
All right, Scott, we will see you next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can subscribe there. You can also submit questions or comments if you have those as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.